Okay guys, Sunday the 5th of November and we are on the Australian dollar US dollar. So let's have a quick recap of this market from last week in relation to our Sunday analysis, and then we'll have a look at the market for the trading week ahead. Okay, so from last week, let's have a look at some of our key levels. We had the key level up toward the previous swing point, which is the most important area of potential resistance for us now. And then down below, I've already marked this in from the weekly support and resistance levels. This is the key area of support. We've also got that sloping support line. Again, we identified this on the weekly time frame. And what we can see, we also had MA200 on the daily time frame. We went over how this is very often dynamic support and resistance. You want to keep your eye on it if the market approaches it. And what you can see is the market has basically been in a relatively tight range, testing at these support levels. And then on Thursday, we spiked up and we just didn't quite reach that spike down from the 6th of October. And the sellers stepped back in. You know, this is the sellers getting in early. It's because it's looking like a relatively bearish setup on the daily time frame. So, you know, the bears are stepping in early, ramming that market back down. Also had non-farm payrolls out on the numbers out on Friday, which will have helped this market make the bearish movement. And what you can see, it's also holding under that MA200, pressed up, closed below it on Thursday, Friday, the strong bearish movement. So coming into next week, exactly the same levels. This remains key resistance. Down at these levels here remains key support. Now what I'm starting to look at now with this key support level is we're starting to move along and get closer to this sloping support line also. So it moves down on this market, or even if we just continue to hold at this level, and then we see the tests at this sloping support line, more than happy to look for potential bullish positions. You know, I need to see a strong break down below here, below this level, before I'd then be happy to look for potential resistance. The reason for that is, you know, we're taking the reading off of the daily time frame and the weekly time frame. There's nothing to say the sloping support line on other people's charts aren't a little bit further down, they aren't a little bit further up. I'd need to see a nice clean break of this level before I look for the resistance, but then I would be more than happy to look for resistance and the stronger bearish movements on the market. At present, it remains key support. Let's get rid of these. Okay, so key resistance up above, key support down below. We still have that MA200 just sitting in the way. Want to be a little bit careful of. And what you can see is, you know, the main area I've been testing is down toward this 7640. There's another minor level up at 7655. So you could expand this support zone up into that 7655 level. But for me, the key level remains down below 7640 and lower. Resistance up above, we have that level sitting at 7697, so basically 7700. And what I would do is just line that up with the close and the open. So the close of Thursday, the open of Friday, which is just lining up with that MA200. I would also be happy to look at this level as potential resistance on the move back up for continuation to the bearish side. So there's not too much to go over today, guys. We're basically in between two very important levels on this market. So as long as we are doing this, as long as we are trading within these levels, I will be continuing to watch for support. I'll be continuing to watch for resistance. We have that level up above also with the MA200, getting that little clue on Wednesday with the spike up as to the lower band of that support and resistance area. It's basically sitting at 7700. Okay guys, so as always, I hope that was helpful. I hope you all have a good trading week next week. I'm James Orr and thank you.